This is iBergamot on September 19, 2016. When people talk about market, they usually refer to S&P 500 large cap index. If you draw the line across the tops at the end of last year, November 2015, and then again in April of this year, and right before the Brexit in June, it's roughly 2010, 2020. And this is where index came down, and it seemed to find support in there. So you say, okay, based on technical analysis, I found a support in S&P 500 index, but you cannot buy the index. You need to buy an ETF, SPY, which tracks S&P 500 perfectly, except it doesn't. Remember that top in November? Phew, we blew it in April. And the April top, we blew it in June. And Brexit wasn't such a big of a deal. The difference is a dividend. The holders of SPY, of ETF, receive the dividend, about 2% a year, which, if being properly reinvested, actually grows to more than that. So for the people who hold actual S&P 500 mutual fund or leverage instrument as SSO, double long S&P 500 ETF, which is closer to index because the costs of the leverage eat up the dividend. You basically don't get any dividend. But even that did not come out to that support, whatever support is supposed to be in technical analysis. And then you put up the market-wide composite index of New York Stock Exchange. Here is November top. You get where I'm going with this. April, right before the Brexit, ooh, we blew right through it. We're under it. So are we under the support? If we're under the support, this bull market is dead. Do we buy? Do we sell? Where is the support? Where is the resistance in the averages? I tell you where. Nowhere. Nowhere. How do you pick the top? How do you pick the bottom? How do you know if the market is bullish or bearish? The market. Market is many more than 500 stocks than in S&P 500. There are over 2,000 of active tradable stocks in America. Here are some ways to approach this. First of all, if you look at all the issues traded on New York Stock Exchange, and there are about 3,000 of them. Some places put up like 2,800, some put 3,600. Let's call it 3,000 stocks. Big, small, everything is in there. In making an advance minus decline issues index, they usually present it in a cumulative way. So if the majority of stocks went up, it's been added to a previous day, and whereas the 0 point, you don't know, somewhere on the left, and it keeps on going up, and it tells you 160,000, 160,000 of what? There are 3,000 stocks on New York Stock Exchange. What are these numbers? Does it even correlate to what's going on in the market? Well, this is in New York. They usually compare it to S&P 500. But why? This is more than S&P 500. This is all the stocks traded on New York Stock Exchange. So we take the price of New York Composite Index and we put it behind. Yeah, it's about the same wiggles. And the black line is New York Stock Exchange Composite Index, and the red line is advanced decline issues plotted in a cumulative way. The wiggles are about the same. The New York Composite fell much harder last year, much harder than advanced decline line indicates. Interestingly, if we look at NASDAQ advanced decline issues in comparison to NASDAQ Composite Index, there is a striking divergence that started in 2014, in the beginning of 2014, and lasted to the beginning of this year. 2-year-long bear market. Most of the stocks fell if we use the same logic being applied to New York Stock Exchange. And it was happening while Nasdaq Composite Index was kind of up and down and flat and a little bit higher. But advanced decline tells a different story. So what do? How do we use it? Do we buy it? Do we sell? Are we bullish? Are we bearish? Is this a bear market or bull market? It doesn't tell you anything. There is a way to make this thing make some sense. If you plot, I'll clean this up in a second. This is not as scary as it looks. If you plot the same advanced decline issues daily over the course of 5 years, that's why it's so busy, because they actually look like, you know, ranges from minus 250 to plus 1500, and sometimes they go down to minus 2700, minus 2900, which means that there are 2965 more declining issues than advancing. We're judging downside here. The upside is not as telling, so we're focusing strictly on the downside. There are, by the best estimation, 3,600 stocks on New York Stock Exchange. So we're talking almost 3,000 down and maybe 400 or 500 up. Oh, that tells us a lot about market. Most of the stocks were really down on August 25 or so. It's hard to get very precise, but you can play with the chart and stockcharts.com and, you know, view different periods. Here's what I want to do. First of all, so I don't drive myself and everybody, all other 2 people watching this video, let's take out anything that's 2,500 on the negative side. Let's take out the entire upside completely. We don't need it. Alright. This is an interesting experiment. Follow me here. Very low advanced decline issues. Very low advanced decline issues. 2 or 3 of them together. Another one. Another one. Kill the dog. I'm getting to my point. Another one. 2 in a row right here. 1, and this last one, minus 2780, was just a little bit over a week ago. One thing is for sure, these are not tops. These are really nice buying opportunities. We're looking at 5-year daily action in New York Stock Exchange Composite. Some of them were excellent buying opportunities. Some not so much, but I remember that time in the beginning of 2012. That seemed like a large drop. And this one in 2014, it didn't come on the lows, but it was very close. Now there is another one. And, you know, well, let's look at it differently. These may be, all of these are good buying opportunities. You buy it, there is something in there. In 2015, during the summer, here is what was actually happening. This is yet another way to look at same New York Stock Exchange advanced decline issues, but this time around, you plot a 50-day moving average. I plot exponential moving average, so it reacts faster. And I presented this in my previous video. If you go a week ago in a previous price movement video, you will see this point looked at through a slightly different moving average. A person can dial this down to whatever time frame you're trading on. If you use this simple approach, zero line. On the zero line, stocks are no good. Over zero line, stocks are good. You buy the dips. Under zero line, this yellow shaded area, this was the warning just like the summer before. And during the December, look, even if you thought this thing recovered, okay, this is good, this thing recovered, let me take a different color, this thing recovered, I'm gonna buy some stocks, I'm gonna buy some index. Look, nothing is going up. This is New York Stock Exchange Composite. Some stocks went up, some stocks went down, most went nowhere. I remember this time very well. There was nothing to buy. You look at stuff and there was nothing to buy. It was just happening. It's not the ancient history. And then it collapsed through the zero line in Europe, you know, No questions. Under the zero, we don't buy stocks. Went up over zero line, stayed there for maybe a week, week and a half, and collapsed again in the beginning of the year, and that was the end of it. Now, you can find the bottom in the very low readings under 350, but some good buttons don't go that down. I'll revisit this issue next week. I'll show you that it seems like easy to pick the bottom with this indicator, but not so much. And then in the later part of February, it recovered over the zero line, and we've been, going up or sideways, or even if we're falling, it doesn't register any major damage. So looking at this, we should buy stocks, we should not worry and accumulate, except there's a problem with buying when what you have, not based on this funny technical analysis, but based on very objective CSI indicator, which if you view last week's video gave us a sell signal. These prices have been adjusted. There was a dividend payment, and because of the dividend payment, people received a little bit. It amounts to about 2% a year, and the prices on the chart were adjusted down, so you don't see the real price. We didn't trade 217.28 that day. We trade some 218.37 or something on a close Friday of the week of August 29, and that was the end of the CSI trend, and we've been down ever since, and there is no buy signal. In fact, I was showing this thing every week since I started doing these videos. I added bonds, and I'll explain why in a second. Last week I said that many S&P 500 sectors give big change down warning signal, which you usually sell right up under the low of the week that produced this signal, or I told in a last week's video, I thought they all gonna go off. This is what it looked like. It looked like they all going off. The trend is off. The trend is over. There is nothing to catch here. It's done. It's over. It's cooked. You can stick a fork in it. 8 S&P sectors are off. S&P 500 itself is off. And you think, all right, the trend in S&P 500 is over, so everybody must be in bonds. Bonds have been off since beginning of August, and there is no buy signals in there. It can give one. There is a setup for the TLT, for long bonds, to give a buy signal this week if the price goes up, if the bonds goes up. It doesn't even have to go up much. It's in such a configuration that we may have a buy signal on bonds, but I said that 2 weeks ago. So, it's no go. One interesting situation is in technology spider in XLK, technology sector of the S&P 500, which last week gave big change down signal, and this week gave big change up signal, which usually is a buy, but it's only a buy when trend starts. In order for trend to start, the old trend, the one that started on 627, has to go off first. And looking at XLK, this trend is not over. This was big change down, and when there is such a big candle, you always wait a Monday morning. This Monday morning was a dip. If you waited a little bit, it went up and it never came to those lows again. But if it does come, then this one is over too. And this is the only thing that's left in S&P that's not off. Utilities gave a very nice +8 big change up signal, and it's already been triggered today on Monday. Now, I don't buy the sector itself. I run utilities portfolio, and if you go to my blog at ibergamot@blogspot.com, then you will be able to see sometime in the past posts, it was in December of last year, there was a setup for utilities portfolio where everything was explained, what I'm trying to do and how I go about it. It's been modified a little bit, and I'm gonna have to write another article on it. But basically, I need to buy one utility stock, and I'm going to do it sometime this week, because it's not uncommon for utilities to go counter trend to the entire market. In this particular case, it may be early indication of the beginning of the new trend, because since the old trends are off, these all can go on a buy signal, no problem, even as early as this week. Maybe next week, maybe in a couple of months, I don't know, but I'm watching the situation weekly and will update these videos when I have something else meaningful to say. Thank you very much.